Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing an illustration which is related to the bank reconciliation statement on the basis of adjusted cash book. So now when we speak about adjusted cash book, we basically understand that this is the second phase, or rather the second part of how a bank reconciliation statement can be prepared. In this specific scenario, you will understand that all those errors, or rather all those parameters that we spoke about, like taking up all the errors and the omission of entries, is going to be a part of this illustration, where you have to consider all these things and then prepare an adjusted cash book, post which the balance of that will be utilized for further going ahead with the preparation of bank reconciliation statement. Unless and until an adjusted cash book is prepared, you won't be able to go ahead with the bank reconciliation statement, and even if you try doing that, that will be an erroneous problem, or rather the question, or rather the answer over here will be completely wrong. So to make it pretty simple for you to understand, we'll go ahead with the preparation of adjusted cash book first. We'll understand how all the items are supposed to be incorporated out of the adjustments that are given to us, and after that we'll go ahead with the preparation of bank reconciliation statement. So let's start with the illustration. We'll first jot it down for you and then we'll read it out. So the question states here that on the basis of the following information that will be provided to you, you need to figure out or locate the errors of the cash book here, and then you need to prepare the bank reconciliation statement as of 31st of December 2016 for Chand BB Limited. So that will be as of 31st of December 2016. Now, the next phase that you have to go ahead with, or rather we have to first prepare the adjustments that are supposed to be a part of this illustration. So let's jot down those adjustments now. So the question has been mentioned down here. The next phase that we are going to do is that we are going to read it out and then figure out which of these adjustments are going to be a part of adjusted cash book. Now, let's read out the first adjustment. Now, the bank balance, that is overdraft balance, as per cash book has been mentioned as rupees 80,000. So that is the start point. And again, as this is an overdraft cash book balance, that means that will be noted down in negative marks, or rather we'll mention that under bracket. Now, the next transaction is check recorded for collection but did not send to the bank, or rather it didn't go to the bank in the first place. Amount is rupees 10,000. That means check recorded or check received from a client. However, we have recorded that into the cash book, but we never sent those checks to the bank for deposition, and that amount is 10,000 here. The next transaction is credit side of cash book cast short by rupees 1,000. That means the balance on the credit side of the cash book is undervalued by rupees 1,000. That much balance is less as compared to the actual balance what it should be. This next transaction, or rather next adjustment, refers to check received from a client or a customer has been recorded twice in the cash book. The amount is 6,000. That means we have received certain check from one of our customers or client, and we have recorded that twice in our cash book. The amount of the check is 6,000 here. Each check weighed around 6,000. LIC premium paid was amounting to 5,000. LIC premium paid was worth around 5,000. That means that much of amount of LIC premium was paid out from standing instructions, or rather it is the standing instruction, and that was directly recorded, or that was directly paid out from your bank account. Now, this will refer as a third party payment directly. The next transaction refers to bank charges being recorded twice in the cash book, or rather in the passbook. Amount is 100 rupees. The next transaction refers to bank charges being recorded twice in the book, which amounts to rupees 100. The next transaction refers to customer's check being returned as being dishonored on technical grounds. Amount is mentioned as 4,000. Continuation of topic. Let's read out the next transaction. Bills receivable collected by the bank amounts to rupees 20,000. That means 20,000 worth of bills receivable by collected by the bank. That means this is a third party collection already done. That means the reason, or rather this specific bill, will be first reflected in the passbook here. The next transaction now refers to check collected, or rather check deposited but got dishonored on technical grounds, amounting to rupees 3,000. The last transaction refers to 45,000 worth of checks were deposited into the bank, out of which 8,000 worth of checks weren't cleared for payment. That means that much amount was still left. So this can be one of the reason, that is the timing difference, or rather the timing difference or the year end difference because of which this error would have occurred. Now, based on all these transactions that we have listed down here, the next phase is to start with the adjusted cash book. Now we'll figure out which all items are supposed to be a part of the adjusted cash book here. Now the first thing that we'll be doing is that we have prepared a rough format of cash book and passbook. The first thing that we'll be transferring here in the cash book is the overdraft balance. Ideally, cash book should have a debit balance, but now that it has an overdraft balance, that balance will be showed on the credit side here. So let's mention that opening balance on the credit side. Now, within this, or rather with this kind of illustration that has been mentioned to us, we need to figure out which are the errors that will be a part of adjusted cash book. Now, when we discussed about the adjusted cash book phrase, we understood that only two kinds of things are supposed to be a part of adjusted cash book. First, errors, which include wrong account, wrong amount, or any kind of delays, or any kind of, rather we can talk about twice recording or recorded twice into any kind of errors. So these kind of errors are supposed to be a part of it. And the next one would be omissions. So any kind of omission, rather when we talk about entries being recorded only into the passbook and no trace of it in the cash book, are called as omissions here. So only these two kind of things are supposed to be a part of this specific adjusted cash book. So in this illustration, we have one problem which states about credit card, or rather the credit side of cash book being undercasted by 1000 rupees. That means to reach a level of X, if you have certain amount that needs to be added up to that part, that is known as undercasting. So if this is the level of balance that you need to have, and if you are here, so this is known as undercasting. On the other side, overcasting means if this is the neutral balance that you need to have and you are already here, that is overcasting. So you need to reduce it, and if there is undercasting, you need to increase it. So if it says, or if the question says that there is an undercasting of balance, that means you need to add up that much of balance on that similar side itself. However, on the overcasting part, when you're already on the higher level, to get it down, you have to switch on to the different side. So if there is an overcasting on the credit side, you have to switch on to the debit side to get it neutralized. So that's when the overcasting and undercasting errors will be rectified here. Now in this situation, you have a credit side being undercasted, or rather we can talk about undervalued. So to add up to that amount, we have to add 1000 more to the credit side. So we'll mention on the credit side of this balance as 1000 more. Now again, we have to mention few more examples here. The next instance states that the premium on life insurance policy of 5000 was paid out as a standing order. That means the first entry would have been reflected into the passbook. In that scenario, there is no trace of that in your cash book here. So this has to be mentioned. This will be a part of omission. So basically the discussion that we had earlier about omission and errors, this example, or rather this illustration, or rather this adjustment is an example of omission of entry into the cash book. So because this entry has been passed out in passbook first, or rather this entry first reflects into the passbook, there is no trace of this into the cash book, and to make a trace of it, or rather to find a trace of it this in the cash book, we have to record this transaction here. So this omission will be now mentioned here as a reduction. Remember, debit side of cash book refers to addition of items, credit side of cash book refers to reduction in items. That means addition of bank balance will be on debit side, or any item that is reducing your bank balance will be on the credit side of cash book. So what do you think, this premium of life insurance policy that is going out is adding up to your bank balance or reducing to your bank balance? That's correct. It's reducing the bank balance. Hence, it will be recorded on the credit side of cash book. So let's mention it there. Now, the next transaction refers to bank charges were recorded twice. Amount is 100. That means on the credit side, or rather we can talk about this specific transaction was recorded twice into your cash book. On the credit side, you have mentioned 200 instead of 100. So what do you think, to neutralize the balance, where would you reduce it, or from which side would you reduce it? If we go into mathematical terms, out of 200, to neutralize it to 100, you will reduce or you will subtract 100 out of it. But when it comes to accounts, you have to switch the sides. So if the credit side is more by 100, to reduce it or to get it to a neutralized level, you have to bring the difference between the amount. That means whatever balance you want, that is 100, out of the balance that is already overcasted. So the difference between them has to be mentioned on the debit side. If this was mentioned on the debit side, the balance would have been mentioned on the credit side here. So whatever has been recorded twice, one of the balance will go on the debit side, and that will be the neutralization of that specific error. Now the next transaction refers to customer's check which was dishonored by bank. Now whenever a check gets dishonored, the first instance or rather the first entry is passed into the passbook unless and until you go ahead and update the passbook, or if you have certain magical powers of getting that updated right where you're sitting. This cannot happen, or probably you cannot think of updating it unless and until you have any intimation on this. So if you have any intimations, you will be able to update that into the cash book. Unless and until that, you will have differences between the passbook and cash book. So right now, when this specific check got dishonored, the entry would be recorded only into the passbook. There is no entry related to this into the cash book. So that means that much of balance has been reduced. So ideally, this check was collected from the customer, it was deposited into your bank account. So you would have already recorded that transaction into your cash book on the debit side. So on the debit side, you would have that much of amount recorded. But now your expectations were that this amount would get cleared, but due to some reasons, this amount or rather this check got dishonored, and that much of balance you are not able to see on the credit side of your passbook. Hence, this got dishonored and it is seeing, or rather you are able to see this on the debit side of your passbook. So what will happen in such a scenario is that on the credit side of the cash book, you'll have to maintain this much of transaction or rather this amount to ensure that there is neutralization of this dishonor entry. So let's mention that much of amount on the credit side of cash book just to neutralize the error. Now the next transaction refers to bills receivable collected by the bank 20,000 rupees. Again, this is a third party transaction that will be reflected only in your passbook. There will be no intimation in your cash book unless and until you update the cash book according to the bank reconciliation statement. So you have to mention that, or rather we can talk about this is a third party collection that has been done. That means your passbook balance has already gone up. So this will be recorded on the debit side of the cash book so that you can get the balance up on the same level. So this amount will be recorded on the debit side of cash book as a part of bills receivable collected. Now the next transaction refers to check issued but dishonored on technical grounds. Amount is 3,000. You have already issued a check and that got dishonored. So if it is already issued, that means credit side of your cash book has been recorded. There is no record into the passbook because it doesn't even make sense for that check being honored and then making a charge, or rather charging your debit or rather credit account of your passbook for further activation or rather further completion of this entry. So if the credit side has been already mentioned with this specific check being issued and it is dishonored, so to cancel that check you will mention the similar amount on the debit side, and that will be like equalization of this specific entry. So let's mention this dishonor on the debit side of cash book. So now that we have this specific transaction being recorded on the debit side, we'll see the difference in it. Now there was one more transaction which states that there was a check that was deposited and it was recorded twice into your cash book. Now whichever check was received and deposited, it was recorded twice. Amount is 6,000. That means on the debit side you would have 12,000 already recorded. To record it once, you have to remove 6,000 from that and mention it on the credit side. That will neutralize the transaction. So let's record that. Now if you see the first transaction, we have already completed the cash book. Now we have to go ahead and figure out the bank statement. So if you see the first transaction, we received a check and we recorded that into the cash book, but we never sent it to the bank for collection. Amount is 10,000. That means 10,000 debit balance has been already increased. On the credit side of passbook, there is no balance that has been recorded. Hence, 10,000 needs to be recorded there. So let's mention 10,000 on the credit side of passbook. There's one more last transaction. That means check deposited were amount of 45,000. 45,000 worth of check was deposited. But out of that, 8,000 amount of check, or rather a check amounting to 8,000 wasn't cleared at all. That means the debit side of cash book will show a balance of 45,000. The credit side of passbook will show less amount, as rather we can talk about 8,000 amount is less on the credit side. So we have to add 8,000 on the bank statement there. So with this, the bank statement and the cash book, or rather the adjusted cash book, has been prepared. Now we can go ahead and prepare the bank reconciliation statement, which is the most important part of this illustration. So I've mentioned the overdraft balance as per the cash book here, which is negative 80,000. So that means in this case, cash book is incorrect and passbook is correct. So we'll act according to that itself. So the first transaction that refers here is check collected, recorded into the cash book, but however not sent to the bank for collection. That means this has been already passed out, or rather this entry has been already cleared in the cash book. and now we have to update that into the passbook here. So when it comes to passbook updation, we understand that this entry is supposed to be added because it is increasing the bank balance. The passbook is correct and hence it will be added. So this amount will be mentioned on the addition column. So this has been prepared. Let's go on to the next transaction. The next transaction refers to the credit side of the cash book being undercasted. That means credit side of cash book was supposed to be further subtracted. That means that much of balance should have been added there. So it has to be subtracted further. It is related to the wrong book, hence that much balance will be added again. Now let's go to the next transaction here. Check received, or rather check deposited, entered twice into the cash book. That means on the debit side it has been entered twice. So we have to reduce it here. That means reduction will be done. So if there is any reduction that has to be done, so in that case it has to be subtracted. It is related to the wrong book, hence it will be added. So this amount will be added into the column, or rather addition column will be mentioned. Now the next transaction refers to premium on proprietor's insurance policy paid as a standing order amount is 5,000. That means passbook entry has been already done for this. It is a reduction in passbook, hence it will be also a reduction in cash book. As the second entry, or rather we are talking about this entry, has been already passed into the passbook, or rather this is unfavorable, or rather whenever we're talking about unfavorable balance, hence we'll be taking that into consideration as to which entry, or rather which book it is first referred in. So now that this is unfavorable balance, it is already supposed to be reduced here. So reduction is done. It is referred to the correct book, hence it will be subtracted. So now that life insurance policy is also not mentioned, or rather it is already mentioned into the bank passbook, so the entry has been already done there. But in this case, this entry has been already passed into the passbook, so we don't have to worry about it. The next entry that is supposed to be done is into the cash book here. So in cash book, it is supposed to be recorded or subtracted there. It is related to the wrong book, hence it has to be added again. So premium on life policy will be added here. Now the next transaction refers to bank charges recorded twice. That means recorded twice. So these transactions have been recorded twice into your passbook, so you have to reduce it. Basically this refers to subtraction. So subtraction has to be done here. Then in that case, it is related to the correct book. That means passbook entry is supposed to be done. Then you directly have to subtract it here. So let's get with that part. Now the next transaction refers to customer's check which has been dishonored by bank, amount is 4,000. So this has been dishonored. So bank entry has been already done. The next entry that is supposed to be done in this scenario is into cash book. Now we have to reduce that much of amount, so it will be subtraction. It will be related to wrong book, hence we'll be adding this much of amount. So let's record it into the addition column. Now the next entry is bills receivable collected by the bank. That means passbook entry has been already done here. This entry now needs to be recorded into the cash book. So it is an addition. It is related to the wrong book now. Hence, you will subtract that much of item. Now, the next transaction will be check has been issued but has been dishonored on technical grounds. That means the credit entry, or rather the entry of cash book, has been already done. Now we have to reduce that much of thing. That means it will be subtracted further. So now that you understand that this much amount has to be subtracted, so neutralize basically on the credit side. If this is your credit side, this is your debit side basically, or rather this is your debit side, this is your credit side. On the credit side, 3,000 has been already recorded. To neutralize it, you have to add 3,000 here. So that will be into the cash book. So addition in cash book, as cash book is wrong, will be subtracting of that much of amount. Now the last entry refers to check deposited amount to 45,000. However, 8,000 check were not collected by the bank. That means that much of amount is supposed to be reflected into the bank. So it is supposed to be added. Passbook is correct, because the entry in checkbook, or rather the entry in cash book, has been already done. So in passbook it has to be added. It refers to the correct book, that is passbook is correct, hence you will add this much of amount. So with this we have completed all the items that are supposed to be added and subtracted. The next phase that we are going to do is that we are clubbing all the amounts of addition and mentioning it in the outer column. So the total of all addition item comes to around 34,000 and the total of all subtraction item comes to around 23,100. So already we have a negative balance. Let's figure out how much balance do we have here. So as this is a recorded, or rather as this is adjusted cash book, the opening balance, or rather the opening balance of cash book, whatever we have taken overdraft, will be mentioned as positive itself. So 80,000 plus 34,000 will give you, so that total will give you 1,14,000, out of which 23,100 is supposed to be subtracted. So that gives you the balance as per the passbook, and that marks the closure of this specific illustration, whereby the balance that we have figured out is 90,900. So this is how you figure out the balance when adjusted cash book is supposed to be prepared. I hope this illustration has given a lot of experience about how to go ahead with adjusted cash book problems. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.